Alrighty, good morning. Hope everybody is doing well. Happy Friday. Hope your 2025 is kicking off wonderfully and everybody has a good weekend here. I was on Fred Krueger, on Twitter and YouTube. I was on his Spaces, X Spaces yesterday. Talked about a few different things, so I just wanted to relay a couple of those points here, what I talked about. We'll show some charts as usual. The first one is pretty interesting, I think. It's kind of as I like to do, try to keep it simple but brass tacks on some charts. And let me pull it up here. Okay. Simple pie chart here. If we looked at rolling 30-day returns, okay, so monthly returns, that means you look at the return of Bitcoin at any given time on a monthly basis. It's not exactly a month, but 30 days, okay, so, July and August both have 31 days. So basically August 15th divided by July 15th's price, and then you just keep rolling that along. Roughly, actually, I guess I should have used a month with a 30 day. So between, let's say, whatever. Too complicated even for me to figure this out in my head. Point is, very simple on a spreadsheet. You're just running the value, whether it's Bitcoin price, gold price, S&P 500, the value of it, say today versus 30 days ago, and then you just roll that back as a formula. So that means that you're essentially looking at a value for every day of Bitcoin's life or gold's life, but it's on a 30-day frequency or a month frequency. So I talked about this in a little presentation last night. Here it is again in chart form. I could have shown this last night. But basically, let's see how each asset does head-to-head and against head-to-head, basically. So gold versus Bitcoin, S&P 500 versus Bitcoin, and then gold and S&P 500 versus Bitcoin. So Bitcoin is the one that's going to stick around in all of these scenarios. But let's just take a look at how that looks. So if we look at rolling 30-day returns for Bitcoin versus gold, very simple chart there. You can see that Bitcoin wins 3,025 days out of 5,200 or so. And gold wins 2,284 days. Now, unfortunately, don't like a couple things about Flourish. I'm using Flourish here to show these charts. They can't even easily show a percentage. That would be great. So I'm pulling up the data here for you just to give you exactly. Should have even had that ready. Sorry, it's just too many data points here. As you can see, it's over 50%. It's like 50. Let's see. If we look at gold versus Bitcoin as a percentage, monthly returns. Okay. We have 3,025 days for Bitcoin. That is 57% of the time. Okay. On the Twitter space last night, I was using actually monthly frequencies. Or monthly averages, I should say. So it's a little bit different. I'm using daily average, still have a monthly frequency. Again, the picture doesn't change at all, but slightly the numbers do. So here we see Bitcoin wins in the first analysis, just Bitcoin versus gold. Look at the monthly return, just roll it over the total lifetime that both assets have been in existence. Okay, so this is looking back to about July 2010 in my case. Bitcoin wins 57% of the time. And if you look in the last 10 years, which I think is a rough, good average to look at, Bitcoin gets a 7% return per month or per 30 days. 7%. Okay. In the spaces, this shows you how finicky numbers can be sometimes in the spaces. Last night I said Bitcoin was 6.5%. It's true if you look on a monthly average, but here I'm looking at a daily average, so it's even more refined. 7%. 7% monthly return on average. Bitcoin wins 57% of the time. What does gold get you on average? 0.7%, which is a nice figure that I wish I had talked about last night, frankly. So 7%, 0.7%. Bitcoin is literally 10 times better in this chart. Not 10 times better proportionately, percentage-wise. It's only 57% better, over 43% on gold, but 10 times better return-wise. Bitcoin will give you 7% per month on average, gold 0.7%. Now let's do Bitcoin versus the S&P 500. So in this chart, we see Bitcoin wins. Is it even? Yeah, it's a little bit less, actually. It is a little bit less. That is 2,996 days, so 56% of the time. God, I got to hard code these in to even catch the stream correctly. 56% of the time here. And again, the trailing 10-month average for Bitcoin is 7% per month. S&P, a little bit better than gold. It's close to 1%. 0.95% per month. So what you see here is still way better percentage-wise for Bitcoin, but not so much better. I should say again, what you see here is with this middle chart, this middle donut chart, Bitcoin wins only 56% of the time, quote, only. Okay, so it's only 12 percentage points better than the S&P 500. But gross-wise, it again wins close to 10 times higher returns in those winning days. So really important numbers there to keep in mind. Okay, so again, roughly, just rough brass tacks, both in the case of Bitcoin and gold, when looking at each head-to-head, Bitcoin wins roughly, let's say, just 55-45. Okay, just rough numbers. 55-45, Bitcoin's going to win. And roughly the return, the monthly return of Bitcoin will be 10 times higher. Remarkable stuff. Okay, that's the entire life of Bitcoin. Now, here's something that kind of breaks people's brains is if you go head to head to head. Okay, so that's the third donut here. Bitcoin still wins a majority, but look at how the S&P 500 and gold have to fight over who's in second place. And indeed, the S&P 500 just takes it. So this is very, very interesting. When you add a third asset to the same analysis, who wins as far as the greatest number of monthly percentage return days? Bitcoin still wins a majority of the time, although the number is not as high as 55, 56, 57%. It's 52% of the time. Okay, so it's a little bit less. Adding both of these assets against Bitcoin in the same chart. So Bitcoin wins still greater than 50% of the time. Okay. And those returns, of course, aren't going to change. So again, Bitcoin's going to get 7% per month on average. Gold 0.7, S&P 500 about 1%, 0.95% per month. But the amazing thing is S&P 500 and gold have to duke it out for who is in second place. Okay. What does that tell us? That tells us that Bitcoin still to this day, okay, because this is a lifetime figure, all right, and it's not decreasing. Even with Bitcoin getting to huge dollar values, 100K in value, these numbers are not changing by any stretch of the imagination. The S&P 500 and gold, they're in the same arena. They're in the same ballpark. They're in the same, just the same boxing match. Okay, that is S&P 500 and gold. Stocks and gold, they're in the same ballpark. All right, they roughly will get you something like 1% per month. All right, in the last 10 years. And those percentages, by the way, are high compared to what they would get you over the last 50 years. Okay, 1% per month. Let's just look at the S&P. 1% per month. For the S&P, okay, that's roughly 12% per year. If you compound it, it's actually closer to 13% per year. The S&P 500 over 50, 60, 70 years is 7%. 7% compounded. So it's even less. Even less. All right, so that is a very interesting fact. It is true. I'm going to put myself up here just to talk to the camera a little bit. It is true that the S&P 500 is doing better than the growth rate of its trajectory over the last 50, 60, 70 years. It is doing better. Get to about 1% per month, whereas over the lifetime, it would get you, 0.5% per month. It's about like that. It's about doing doubly better over the last 10 years than it did over the last 50, 60, 70 years. So then that begs the question, well, is that sustainable? Maybe. It's certainly still an exponential growth curve, okay? Remember, exponential growth simply means compound growth. Compound growth simply means constant growth. So when we talk about these numbers in finance, stocks, bonds, yield to maturity, IRR, ROI, whatever, this is always an annualized, constant, compound growth number. All right, if you're quoting it correctly, that's the way yield to maturities are, IRR, so on and so forth. So, yeah, it's interesting that the S&P 500 is doing better than it did over the last 50, 60 years. Okay, but then you got to ask: are some industries inflated? Is it due to money printing, excess money printing, or is it legitimate? It could be because of AI. It is true that you could see a big kink in this shift start not just in the last 10 years, but really from 1995, start of the World Wide Web. And no one today in their right mind would deny that the World Wide Web is a nice, positive phenomenon for humanity. Of course, social media haters might do that. But in general, and this is also why, by the way, we can't look at inflation over long-term growth rates as provided by the government or some all-seeing eye that has no skin in the game. These government agencies that publish things like compound growth rates of prices, because there's no skin in the game here. Better to look at something where something is on the line for people, that is their pensions, their savings, corporate balance sheets, all the rest. How can you do that the best way? The stock market. Stock market has increased in its return potential over the last 10, 15, 20 years, 25 years, 30 years, actually. It's gone from, over the lifetime of the S&P 500, again, 7% compounded, to 10, 11, 12% in the last decade for sure. Okay, the number I'm giving you is 1% per month over the last 10 years. So it's good. S&P 500 is definitely, it's good to be invested in stocks. You want to be invested. But how bad are the down draws with stocks? Will the stocks protect you from purchasing power reduction is another question. And what Bitcoin has shown is that the S&P 500 is not good enough to keep up with the growth of Bitcoin, the trajectory of Bitcoin. And it's possible that what Bitcoin could also represent is people's ideas of what their purchase, what they are afraid of could happen to their purchasing power, and thus this massively higher, 7 times higher, 7, 8, 9, 10 times higher Bitcoin return on a monthly level or whatever is a representation of Bitcoin protecting purchasing power and not the S&P 500. Okay, so very important signals from the Bitcoin network there. And though a question was asked of me last night in the Twitter Spaces of if I would, back to the power curve, back to the power regression of Bitcoin. If I thought that the power relationship of Bitcoin, the power curve, which I'm going to talk about in a second, the growth rate of the power curve, if I thought that was a representation of purchasing power solely, or sort of the main driver was purchasing power, right? So because Bitcoin's growing at these huge rates, it's because people are afraid of their purchasing power. And actually my answer was no. I think that the bigger picture with Bitcoin's price rise is a representation of adoption of a new system that's completely out of this world compared to gold or the stock market. Okay, so that's the bigger picture. And how can I explain that with these three donut charts here? Okay, how am I going to explain that? If you would ask the average hedge fund manager, pension fund manager, family office, family wealth, asset manager, how much Bitcoin should be allocated to a portfolio today, they would still, the silver grays would probably still say 0, although the younger, more forward-thinking people might say a couple percent. Okay, and indeed, we see billions, tens of billions, hundreds of billions flowing into ETFs, which is great, and that's absolutely Wall Street is finally dipping their toe into the asset class, no doubt. But the adoption is minimal, and they're afraid to go all in on their traditional models, their traditional, pension fund drawdown schemes of retirement pension fund planning. How much X percent are you going to need this year to pay for your lifestyle while you also lose this amount of purchasing power each month? All these little actuarial tables that pension fund managers or life insurance managers would have for people. Bitcoin is still not even close to in the ballpark there. And how can I illustrate that in one table? I'm going to show you this table now. This is Bitcoin. This is the lifetime volatility analysis of the three assets. Okay, so where Bitcoin was winning 50% of the time, either head to head or versus all three, Bitcoin drastically underperforms in this level. And I use underperforms in air quotes here because it depends on who you ask. Of course, to receive high returns from this massive Bitcoin price adoption, this orange wave of interest that we see every 4 years, and it's just a natural function of Bitcoin's adoption. Of course, there's going to be high volatility, but are you aware of how high it is compared to traditional asset classes? This is the same analysis now. Let's look at daily volatility on a 30-day window. Okay, so it's still that monthly idea, but instead of monthly returns, we're looking at daily returns. Okay, so let's just take a look at each day. How does the S&P 500 do? How does gold do as a daily return? Okay, and then let's take the standard deviation of that over a 30-day window. So that just shows us 2/3 of the time, volatility is going to be X. Okay, lower volatility is better in this case. Okay, so whatever is the minimum volatility of these three asset classes will get on this pie chart. Again, you can see, interestingly, gold and the S&P 500 split almost 50-50 here as far as volatility, which should tell you something. Bitcoin wins only 34 days out of the lifetime. Okay, so, and that volatility count is, let me see, 5,308 days. 5,308 days is the lifetime sample here. Bitcoin wins only 34 days. On the chart, or the table that I showed yesterday, it was actually 0, because again, I'm looking at monthly frequencies there that actually averaged to 0. 0 months where Bitcoin won. That's another, it is true, but this is days, so it's a little bit more refined. It's just a little bit more refined. Doesn't change the picture at all, obviously. Bitcoin is just, it's a drop in the bucket of financial assets when it comes to volatility. Bitcoin is more volatile. It is from the beginning, from 2010 to today. This table I ended it on December 31st, 2024. This chart, this idea. Okay, Bitcoin remains super volatile till this day. Doesn't matter, the price is higher, ETFs, people are interested more. Trump might like it, whatever, does not matter. It is still more volatile. So for this reason, the fact that Bitcoin is such a small share of this chart, this represents safety. This represents investors feeling confident, good in their investment, safe in their investment, stable in their investment, able to sleep at night in their investment, not having mail-ox moments in their investment. That's what this table represents. Nobody thinks in the Wall Street world still, based on their models, based on what they talk about as safety, nobody thinks that Bitcoin is safe. We know that there are many people that do, of course, the smart ones, the loud ones, the people on CNBC. Of course, we know that this is changing as we speak, but still the numbers do not paint the picture that it is safe. All right. I'll tell you the volatility figures just so you're curious. So this is daily vol now. So in the last 10 years, Bitcoin's daily vol was 3.3% on a 30-day window. Okay, so measuring it, rolling it, just like I did with the monthly returns, we're going to roll daily vol over a monthly window. Through that entire period, on average, not through the entire period, for the last 10 years. This is a little bit different than the pie chart. The pie chart is the entire period, by the way. But the just to give you a last 10-year window, which is not too much different than the all-time, but anyway, the daily vol for Bitcoin, 3.3%. What does that mean? It means 2/3 of the time, all right, this is a standard deviation figure, 2/3 of the time the Bitcoin price each day will go up or down 3.3%. 2/3 of the time each day in the last 10 years, the Bitcoin price will move up or down 3.3%. What about gold? Daily vol, 0.8%. What about the S&P 500? Daily vol, 0.9%. 0.9%. So in this case, as lower is better, gold and S&P, again, they're almost equal in their averages. We're looking at something that is about 3 times worse, to use a crude multiple. Okay. A third worse is perhaps a better way to say it. No, 2/3 worse. Sorry, a third of the potential of the safe market. 2/3 worse. For every percent of volatility of daily vol in the S&P 500, Bitcoin will take 3, roughly 3%. Markets don't like instability. Markets don't like danger. Markets don't like volatility. Markets get scared very, very easily. So it's a very important chart, in my opinion, to show you how little, in fact, Bitcoin is adopted by the institutions, by the big players. Even if you hear something like hundreds of billions of dollars of ETF flows, great. There's trillions, tens of trillions of dollars in the stock market, hundreds of trillions of dollars in the debt markets. It's not a drop in the bucket. People are uncomfortable with it. They should be. They should have you and I'm sure, dear viewer of this live stream right now. There's not too many, but thank you for watching. We know the sirens are ringing for us about how important it is to have Bitcoin to protect our family and in our portfolio, but the rest of Mr. Market does not know that at all. And this, in my opinion, is the best chart to show that. Bitcoin has horrible volatility if you are a hedge fund manager, if you're a portfolio manager. Of course, with more risk comes more return, but they're not comfortable with that risk yet. Okay, so that's the point. All right. So having said that, having looked at those chart, I want to show one more on the screen here. Let's put this one up. Here we're going to show the evolution of compound annual growth returns for Bitcoin. Evolution of compound annual growth returns. The Bitcoin power law relationship. Power curve, I should say. Let's put it in log scale. All right, on the left. So the left-hand axis here is price. Okay. The right-hand axis is the compound return per annum. All right. Now, how am I calculating this? Let's take off the trend. Let's just look at this. If you use the old compound annual growth formula, you can easily get this. But basically, you have your present value, your future value, time changes. You have to factor that in. What was the present value? What's the future value? There's no payment. There's no annuity here because it's just Bitcoin doesn't pay an interest. Okay, it's an important thing to understand when you make these calculations. So Bitcoin doesn't pay any interest, but we can see present value and future value and figure out the time dilation and figure out a percent. That's what I'm doing here. So in this entire chart, it always goes to today, and I'm at $101,000. Congratulations, dear Bitcoiner. When I've uploaded this chart, we're over $100,000. As of January 17th, 2025, $101,000 Bitcoin. The entire chart is based on this price. In fact, it's based on $101,000 Bitcoin. Okay. So with $101,000 Bitcoin today, as we look back at lower prices, and almost everybody has made money in Bitcoin at this point, you're going to see very few people that are negative. Few people here in December that bought at 106,000. Okay. But this chart would change every day depending on the price. Very few people have negative returns. Almost no one has a negative return who has gotten into the Bitcoin world. So as you bought in lower prices, but you had to hold longer and longer, you're still going to be rewarded in excess because the price was just so low in this power law relationship, so on and so forth. As you get to lower and lower prices, you still will have a little bit of a higher return. Okay, so here, if you bought, even if you bought in that peak here in June 2010, remember we went over to $35 a Bitcoin. Let's find it right there, June 10th. Your compound annual growth rate, your CAGR, if you held until today, 79.7%, 80%. Okay, if you bought before that pump, say 80 cents, all right, this is only 2 months away. 2-3 months away, mid-June, mid-April, your CAGR increased to 135%. All right. Notice how that works. It just depends on where you are in the cycle, where you buy here. That's how this chart works. Now you can notice how the evolution of the CAGR works. It looks like something if you're following my channel closely enough. It looks kind of smooth here. There's these peaks of price and the drop in the CAGR. Peaks in price, drop in the CAGR. Peaks in price, drop in the CAGR. But generally, there's a smooth transition here. Now, it is true that as we get closer to today, looks a little bit more wonky. Goes way up here. Big returns, in fact. All right. And this is beyond a year ago. We can go back to 2 years, 2023, about 2 years ago. From about 2 years ago, let's say even 3 years ago, things start to look a little bit more wonky. You look higher in returns. Nothing to say in particular here. It's just that's how the formula works. But this will settle down eventually to the Bitcoin power curve trend. In any event, we get till today, and actually I stop it in 30 days because it gets so wonky. As you can see, I'm off the chart here. I capped this at 200% per year. CAGR. Look at your CAGR here. If you bought at only in September, all right, so less than a year, we can still do the calculation. We can still figure out the compound growth, present value, future value, all the rest. If you bought a 54 grand Bitcoin in September, it's already over 100 now. So you're clearly more than 100% per year because you've done 100% in 4 months. What's the CAGR? 461%. All right, so roughly in a quarter, you're doing a year's worth of gains. So if you annualize, a great year's worth of gains, 100%. So if you annualize that, 461%. All right, so things get really wacky as you get closer to today. That's the nature of this analysis. But what you can see here in particular is if you look back far enough in time, things look a little bit smoother. So let's put the trend line on now to smooth this out. Oh, sorry. Let's just put the trend line through the CAGR. All right, it's right here. Okay, so you can clearly see that. Yes, from 2022, 2023, things are a little bit wacky. You're well above trend. You're looking really good, by the way. You bought 15 when Peter Zeihan was on Joe Rogan in October, November 2022. He told you Bitcoin was $16,000 above its value, or $17,000 above its value when it's 16,000. The quaint, smart gentleman that he is. That was a mistake to listen to him. Right? Never financial advice, of course, on the show, but that was a big mistake to listen to him. Because if you had bought then and held until today, you'd have 100+% compound annual growth per year. I mean, think about that. The actual multiple is nearly 10. All right, it's not 10. It's not 10. It's not 5. Somewhere in between. Okay, above 5. It would be 5 here if you bought at 20K, obviously. But if you buy at 16K, it's a pretty good multiple, pretty good return. And the CAGR, the compound annual growth rate, over 100% per year. Massive, enormous, destroys anything on Wall Street. Destroys it, not even close. And if you had listened to Peter Zeihan, you would have missed that. So anyway, how do I calculate the smooth line? The smooth line. Where am I calculating that? Well, instead of looking at the price, all right, the price, let's calculate returns until today based on the trend. What is the trend? It's that power trend. So the old power, let's just take off this. This is the old power trend we know and love of Bitcoin, 96% R squared. Bitcoin moves not in exponential, but in power. You get this power trend, but we can also calculate compound annual growth on this. So when we do that, we get a curve that looks like this. All right. And this is really the whole shebang when it comes to Bitcoin's growth rate, it comes to finance in general. How does Bitcoin compare to other asset classes? This gets us back to the S&P 500 discussion, to the gold discussion. This is just the whole enchilada. So if we put even the more noisy actual returns, these are kind of people's actual returns. By the way, just find out where you bought Bitcoin. Did you buy in the low of the crypto winter in August 2015 when Bitcoin was around $200 a Bitcoin? You would have 96%, 91% CAGR, enormous CAGR. All right. I mean, obviously, you can just think about the enormity of that. When Bitcoin was $200 per 1 unit of Bitcoin. Now it's $100,000 10 years later for 1 unit of Bitcoin. That represents a compound annual growth rate of 91.5%. Peter Schiff could only dream of this for his clients. Peter Schiff has robbed his clients of this by speaking completely out of his ass for 10 years because Peter Schiff was talking about Bitcoin at this time. But the trend, now let's look at the trend of this is the smooth line. So even if you would have had like 91%, right, of buying in September, August of 2015, the trend at that time, I shouldn't say at that time because this is actually the total trend. So the trend was a little bit different at the time. But the trend has been that if you bought around this time, let's say 72%, 71%. If you bought around this time in 2014, the trend was 80%, the dotted black line. Okay. So that's how it works. So you can see here that actually these deep drawdowns that we had in 2022, 2023 were great buying ops and still remain today great buying ops. In fact, some of the greatest buying ops as a percentage basis compared to when Bitcoin was 200. You'd have to go back to like 2012 levels of Bitcoin price, sub $30, to get to a return level that was offered in 22, 23. really incredible, incredible analysis, I think, if you look at it this way. Geo says, thanks to Peter, I got into Bitcoin 5 years later than 2015. Thank you for that comment. Thank you for that comment. That's as salient as it gets, I think. It really is as salient as it gets. Of course, it was riskier then. Of course, it was more, let's say, less understood, more pressured, more uncertainty, more hate around it in the mainstream media. I shouldn't say that. We have just as much hate today. Even if in the US there's a more friendly administration for it, nobody knows how that's going to work out. But anyway, it's a system that's agnostic and neutral anyway. So in my opinion, it's not going to matter too much. Might matter in the short term, less in the long term. But yes, I get you. I mean, I feel for that view because, yeah, it was scary to see it come down from $1,200, like the ultimate bubble, right? I mean, it was a year, 2 years before it was trading in the tens of dollars. Then it's $1,000. Then it crashes to 200 from 1,000 to 200 in the next year, 2 years. I completely get you that Peter Schiff's advice would have sounded more comforting, more helpful at the time. But that trend has not changed is the thing. Peter has just is like an ostrich, head in the sand type of thing. If you see this trend, and if you look at this R squared of this 96% R squared, which is the same R squared of this trend, by the way, it's going to be the same R squared fitting this. Actually, that may be true. It might not be the same R squared. Good question. I should measure it. Regardless, it's the same idea. You try to mess with this trend as far as returns go. It's a massive trend. Okay, so the only time you'd be negative right now is if you bought Bitcoin in late December, around Christmas. After getting close to the table, ham, turkey on the table, and people talking about Bitcoin, getting excited. Buying then over 100,000, 105,000. Then yes, you'd be slightly negative. Look how sharp that is. Okay, so now is a month later. This is January 2017. I'm recording this, and in December 20, did I say? Sorry, too many numbers. This is January 17th, 2025. If you look 1 month prior, December 17th, 2024, the all-time trend would have shown you at a 43% growth rate in Bitcoin's price. Fine, compounded. But the actual CAGR that you would have today, that is looking at the price you bought at 106,000 and looking at the price that this whole chart hinges on today, which is 101,000, even though it's only a $5,000 loss, if you annualize that, that's a 38% CAGR loss. So that also shows you got to be careful. You got to be careful when you get into this stuff, if you are getting into it. And you got to also not be too scared if you get into it that you have some of these big dips, because I could show you that donut chart again. We go back to this chart. Let's transition back to this chart. Huge, monstrous volatility is the world of Bitcoin. All right. So if you see that something like gold, something like the S&P 500 will beat you in volatility 50% of the time, most people are going to stay out. And my story to you this morning, my contention to you this morning, is that most people are staying out. Most people will stay out. Think about the glazed eyes that you get talking about Bitcoin on Thanksgiving or Christmas. They will stay away, because that's what Wall Street sees. Wall Street sees volatility. It's scary. It doesn't matter. There's $100 billion plus flows into ETFs. It doesn't matter that MicroStrategy makes waves and sailors on TV talking about Bitcoin all the time. There is a trend here that is very difficult to fight. That's the big message. Okay, so let's go back and answer another question here. The beautiful thing about trend lines, all right, is we can predict price, and we can also, in this case, predict returns. Okay, so let's go out. We're literally right on trend. Okay, this doesn't happen too often, by the way. Again, always reiterate that. Price goes above trend, price goes below trend, but those points when it happens, very rare. If you think about the 5,500 days of pricing data, passing it is a handful, a dozen, right? It's a handful of days where the price really roars above, really falls below, sinks below. Very rare in itself. So by the way, us hanging around trend here, we're in actually, it's ironic because we're in sort of neutral territory where we're very close to the 50% median territory, all the rest, but it's also rare in that it doesn't, it more often than not hangs below the trend than it does right at it. Okay, I should probably do another analysis of that as well, just to update people. Anyway, so interestingly, we're in a rare place in that we're crossing through it, perhaps blowing through it, but time will tell. But a not so rare place in that we're right around the 50 percentile median, or midpoint, I should say, the mode of where a lot of the data, actually we're getting out of the mode. So anyway, another beautiful thing about trend lines is you can project. So let's project out. We are right around it today. $100,000 price, $90,000 trend line. Let's project out till the end of the decade. Okay, let's go out. $560,000 Bitcoin. Okay. For those who've been following this for a while, again, the trend line goes down, it goes up, depending on where price is each day. This has been pulled down a lot since even 6 months ago. 6 months ago, this number was closer to 600,000. Okay, keep that in mind. 6 months ago, this trend was showing 600,000 at this date. That's how it works. The model adapts, the model adjusts. That's the beautiful thing. It's simple, scientific, mathematical. The model will adjust, but yeah, it can be big numbers. Maylocks numbers, sort of scary. I do think that this is actually a lower number, and for that you'd have to look at some different analysis, which actually probably my friends at the Best Bitcoin Data group are showing more. It's where you look at these different percentile bands. So you look at, I do percentiles based on multiples a lot. It's a little bit different. They're doing it, Plan C and CINA, they're doing it based on, you're actually drawing slightly different trend lines with different coefficients. So it's like fatter. You'd see, you can still get to the same idea. What's the 90th percentile of price movements? What's the 10th percentile on the low side? But what you're getting is fatter bands down here and thinner bands in the future. My point is, looking at that, I think that it's going to be higher than this. Even though the OLS, this is called the OLS, the sum of least squares regression here, the power curve, that is, it's showing 560,000, but I think this is being pulled down a little bit more than what will turn out to be the normal slope. A little bit too much because of this time period. Pulled it way down. Pulled it way down in 2022, 23. So every day as we were moving through the power curve here, that black line was actually higher than it is now. It was higher and it was being pulled down. So it's that evolution of the power curve, which is important to show. I could be wrong about that. I don't know the exact number off the top of my head. I'm just telling you. I think that what you see right now is actually slightly low compared to how Bitcoin will do over the longer term. In any event, $560,000 Bitcoin. Okay, that's what it is at the end of the decade. Now, let's put the trend line back. Trend line is running us. Okay, it used to run us back in the day, as I just mentioned before, 70, 80, 90, 100%, which is just enormous numbers, right? If you bought Bitcoin at 80 cents and held till today, or let's say 95 cents. 95 cents is the trend line price. If you bought Bitcoin at 95 cents, held it till today, 129% return. Just enormous. Compounded every year. No asset in the world was ever given that. But still, if you think that you're not going to get that now, and again, never financial advice. If you think that somehow like the power curve is too soft, it's not aggressive enough. A lot of people want to see hyper-Bitcoinization tomorrow. Might happen. I doubt it. Might happen. I doubt it. But if you think that this is too soft, this model, it's not aggressive enough, it's not good enough, it's not as good as Plan B's model or whatever, which has been revised like 3 times over the last 5 years, think again, because 43% compounded, which is where the dotted line is sitting today, 43.5% compounded, is enormous. Let's go back to the numbers that I had in the pie chart at the beginning of the stream. What were they? Bitcoin, roughly 7% per month. Okay, 7% per month. Stocks and gold, 1%. Gold 0.7, stocks 1% per month. Okay, again, we talked about stocks. Let's multiply by 12, roughly 12, 13% compounded. Not a bad return, actually. Again, you got to ask about the purchasing power of your dollar. Not a bad return, though, for stocks. Bitcoin on the modeled out scientifically, 43%. Notice, though, that's compounding. We start to see now that compounding is a little bit different than simple averages. I gave you the simple average over the last 10 years. 7% per month for Bitcoin, 7% per month, okay? Multiply 7% by 12, you get 84%. That is not what Bitcoin runs at, scientifically, trend-wise, model-wise. Bitcoin runs at 45%, okay? So there is a difference there between sort of simple averages, which is what I showed you at the beginning, and compound growth. If you want to really get to the nuts and bolts of, the heart of returns, you got to look at compound growth. So Bitcoin is actually a little bit more conservative than that 7% number I said, which was the average monthly return over the last 10 years. Bitcoin is not doing as well. You're factoring these higher numbers over the last 10 years. Obviously, I'm starting here, which interestingly, the compound growth was about 70%. About exactly. Starting here, 2015, 70, 73%, and it went down. So you got to look at the whole picture, but regardless, I'll try to show you a lot of numbers to keep straight, but I'll try to show you. But regardless, 43%, it's enormous. It's enormous. Now, let's go back to the S&P in particular. Gold is a little bit less, but let's just stick with the S&P. As I said, the 75-year average of the S&P 500, not average, but the compound, the very strong number, the slope of the exponential trend of the S&P 500, 7%. 7% compounded. You reinvest your dividends, you get 9%. Okay. But today, it is true that in the last 10 years, it's even higher. Okay. As I said, the average is 12%. That means the compound growth will be higher. It will be. In the last 10 years, if you invested in stocks in the last 10 years, certainly if you invested in the nadir in 2009 when it hit 666, you will have done much better than 9% even. You would have been over 10, 12, maybe 15. Just buying the index, nothing else, just buying the index. Still, let's start to think about the difference between 15% compounded and 43% compounded. To there, I'll take you to my website. Got the power trend here. We got the narrower bands, which I've talked about before, the first live stream of the year. But here we got to look at doubling time. This table, my website. I'm showing the trend growth rate at each point. Okay, you see here, this is the end of 2025 on this table. As you see at the end of 2024, it was 45.4%. Yeah, that's interesting actually, 45.4. It's slightly different than I would have expected. Yeah, I'll have to check the math on that. It's actually slightly higher here. It shows you, this shows you rounding, this shows you different things. You can get different different numbers. But anyway, the point is the exact same. Nothing's going to change here from the idea. 45%, 43%, whatever you're looking at. It's projected to be 42% by the end of the year. Okay, projected to be 39% by the end of 2026. 27, 36%. End of 2028, 34%. It's a very slow decline. So even though it does decline, it's very, very slow. And by the end of 2035, it's still 24.4% per year. And if I asked you, do you know when this chart, when this dotted line all right, which is roughly 44, 45% per year right now, when will it hit 10%? Let's just use 10% as a nice round number. It's something like what the S&P does, okay, with reinvesting dividends, something like 10%. When will this dotted line hit that according to the Bitcoin power curve? The answer is after 2140, when Bitcoin is supposed to top out at 21 million BTC. It's like 2170, 2167. That is a really important point. If you think that this power curve is not aggressive enough for your returns, or not strong enough, or doesn't model Bitcoin's potential for hyper-Bitcoinization in the world, understand that this declining, this asymptote here of this little declining compound annual growth rate, it's not even going to hit 10% for another 150 years. Okay? That is the power of the power curve. That is the power of the power curve. Also look at doubling time. Okay? Bitcoin right now is set to double every 2 years. Again, this is just the slope of the trend line. It's the trend line, that's all. Nothing fancy. Every 2 years, Bitcoin's price doubles according to the power curve. Okay? Trend doubling rate right there on my website. This will slowly increase. By the end of the decade, you're doubling every 2.5 years. Okay? And then 24%. Notice, when will Bitcoin's doubling rate equal that of the S&P 500? If the S&P 500 is roughly 10%, all right, and 10% compounded, which stocks are compound functions, they're exponential functions. If 10% compounded will double in exponential, so it's a fixed growth rate. So 10% compounded doubles. When does it happen? Does it double every 10 years? No. Compound growth is faster. It's rule of 72, very roughly. It will double every 7.2 years. So if the S&P 500 on net with dividends reinvested gets us a 10% return, it will double every 7.2 years. 7.2 years. So here again, think about, we're not going to get to that rate of doubling with Bitcoin, according to the model, for another 150 years. So Bitcoin is that much better today. And this decay is a good word actually to use. This decay in the growth rate of the power curve is so slow that it's not going to reach the doubling rate of stocks for another 150 years. Now, one more thing to say about this. People get hung up on the model as well because they think, this is gospel, it's going to happen this way. I'm not saying that at all. Not saying that at all. Bitcoin grows according to power. Okay, one more thing actually before I get to this final concluding remark. How can we define this power relationship another way? Remember, it's not exponential. It doesn't have constant growth. It has declining compound growth. Okay, we can still put a compound growth number on it, 45%. It's a number that Wall Street understands, that we can put that on it, but it declines very slowly. Keep that in mind. It declines very slowly. What does power mean? A power growth, which is like how nodes, networks, network traffic, cities, cities don't explode into the sun, even though we grow the world's population by compound growth about 1% a year. Depends, actually 1.5%. It's declining, that rate of compound growth. So compound growth can go up and down too, by the way. But if, on average, lifetime, we're growing at something like 1.5% per year and declining worldwide. But why do cities, more densely urban packed areas, why don't they explode? If we're doubling so quickly, every 30 years, why don't cities explode into the sun, from this amazing compound growth rate? The answer is that cities grow in power. They grow in a more declining rate, actually, like Bitcoin. So how do we show the proportionality of this? Well, it's right here. It's the last column on this website. I know I've shown this a lot for those, the longtime followers, but you really got to get this chart if you want to study the power growth. Again, price means adoption. Price means adoption when we're talking about Bitcoin. It doesn't mean what Mark Zuckerberg thinks about it or Donald Trump thinks about it or anybody. It means adoption of Bitcoin. So when Bitcoin was really young, about 1,000 days old, okay, in 2011, November, Bitcoin was 1,000 days old. This is days from the Genesis block, days from January 3rd, 2009. I'm going to give you a new calculation here. Okay, how long would it take to double price? How long would the trend line go from $3, $4 a Bitcoin to $8 a Bitcoin? The answer was 132 days. What is 132 days in the context of this? It's 12.8% higher than that November day number. All right. So it's a very simple formula, one independent variable, one dependent variable. The power rate of growth is not constant. It is declining, but it is proportional. So as Bitcoin is smaller, less days in the system, less adoption under its belt, it will grow quicker. Right? As it's smaller, it goes quicker. But as it's larger, it grows smaller. Okay? But the proportionality is that as the time dilates at the same percentage, the doubling will occur. All right? And you see that here. It's a little bit wonky for people that are caught up in Wall Street speak a lot, compound annual growth. But the increase in time to double here, the last column, is the same. By rounding, it changes a little bit, you see, because I'm picking just dates that equal doubling time. But the answer is 12.7%. So for every 12.7% increase in the lifetime of Bitcoin, doesn't matter where you start, yesterday, today, 2 years from now, 5 years back, you just pick a point. How many days was that in the life of Bitcoin? This is measured by days. You can do months and years, but it is measured by days. Add 12.7% in time, add 12.7% in the adoption curve, Bitcoin's price will double. Bitcoin's adoption will double. That's what you're seeing with Bitcoin. That's why it's so crucial. It's so interesting. It's so important to see. So anyway, that is the power curve. I wanted to say something here. I think I lost my train of thought on this tangent. Maybe someone can remind me in the comments, but I might have to end the video here and then think of it later while I'm, in the middle of the night. Remember what I was about to say. The point is, the growth is power. The growth is different than the growth of gold, the growth of stocks. These things are exponential. They're like traditional financial assets. Because of financial interest, they grow exponentially. You can find a fixed, constant doubling time for them. 10% will grow. It will double every 7.2 years. Power is not like that. But again, don't be dissuaded by the fact that Bitcoin does this. Maybe this is how I wanted to close it, is that the haters of the power curve or math that don't believe this or understand it, can't figure out how it works, they don't understand that even though you see a declining model here, they're ready for hyper Bitcoinization, right? Even though you see a declining model as far as price and return goes, all right, it's still enormous. It's enormous compared to anything we've ever seen in the financial world. And that makes sense because it's a completely alien species that has come, to the world. It's a scarce digital asset. It's a protocol like email, but it can convey value. That's why it grows like a network. Maybe I was making the point about cities. Anyway, the reason cities don't explode into the sun is because they also grow this way. Okay. So I expect this to continue. Oh, maybe I guess the very, very last thing is, this was the point. If you think that I'm married to the model, if you think that I'm married to the idea that this 10% target, which is what stocks do, and that doesn't change, right? It does grow up a little bit. Remember, it used to be 9% on average lifetime. Now it's above trend. It's going to, like I said, 12, 13%. I don't know what it is exactly. With dividends invested, the S&P 500 gets you 12, 13%, which is enormous. Like, you better make sure you're getting that from your broker right now if you're only in stocks. I know nobody watching this is. So But it probably will revert back to the mean or the trend, which is 9% per year. Anyway, let's just say 10. When does Bitcoin get us to 10? 150 years from now. Okay? If you think that I'm married to that idea or that Bitcoin's going to just smoothly go to that, or we still have $1 150 years from now, I'm not saying that at all. I'm just saying this is what the model is telling us. This is how power growth occurs. This is how growth occurs. This is how adoption in networks occur. It could be, and actually I suspect that somewhere here, somewhere around this doubling, when we get to 2033 and 2036, all right, when we've been in Bitcoin about 10,000 days or getting to 10,000 days, okay, and this happens to be that the trend line will take us to $1 million Bitcoin. It's not necessarily just because of the number, although that is something, right? All right. So, we're at 100,000 today. When will $1 million occur? Less than 10 years from now. My point is, I believe, based on a couple other factors, also the growth of the monetary base, which is the world's benchmark bucket of value that compares to Bitcoin. Bitcoin doesn't actually fully compare to the S&P 500 or gold because it's different. Gold is demonetized from the global financial system. The global monetary base is not. The global monetary base is the core of the financial system. Fedwire is the core of the financial system. Chips, I believe it's called Chips in the United Kingdom, is the core of the British financial system. Those values, again, doubling. Remember, the global monetary base is about 12 trillion. And at the fastest rate of growth, which I think is, it's possible it could be less than this, but that's 12.7% per year. That's my blended weighted average of all fiat units growing, highly discounted bad currencies on the one end, the dollar, euro, yen, yuan, pound sterling, Swissy, they're on the high end, 80, 90% of the bucket as far as weighting. If 12.7% is the actual growth rate that will continue for doubling, and it's arguable that it could be even less than that, frankly, because some of those currencies lose value faster against the dollar. There's two ways to calculate it. In any event, I'm giving you guys a lot of side information here, but the global monetary base could double in roughly 6 years, double again in 12 years, 6 years from then. That's exponential growth. Doubling of global monetary base will take you from 27 trillion 6 years from now. That's 54 trillion. 6 years from then, it's 100 trillion. Okay, so $100 trillion monetary base does put us right around this period, 12 years from then, 2033 to the 2036 window. It's kind of the fact that it is that $100 trillion number that I'm thinking something could happen around then. But not only, war, the Bretton Woods Agreement happened in the ashes of World War II. I mean, World War II was the most consequential war in world history, no doubt. And that changed the financial system. It's possible that war could change the financial system again. And if you look at just the sheer size of some of these numbers, $100 trillion, what does it mean? What does an Argentine peso exchange rate look like at a $100 trillion monetary base? It's very difficult to tell, but I indeed think that it's not going to be a smooth mathematical curve like this. Even though Bitcoin does grow in this beautiful, smooth way, 96% R squared, the turmoil is going to happen in the midterm. All right. 10 years from now, 10, 12 years from now, that's when I think that the fireworks could happen. That means 2 to 3 halvings from now. Closer to 2 maybe than 3. So that's got to be it for a Friday show, guys. Thanks for the comment there, Gio. That's very interesting, and I think that's a very salient point. Thanks to Peter, I got into Bitcoin 5 years later than 2015. Wise words for everyone. And, this stuff, you could say the same thing about Peter Zeihan today, or Peter Zeihan in 2022. Stay away from Peters. Listen to Matthews. Never financial advice, of course, but thank you all for watching, and I wish you all a very pleasant weekend. Take care.